The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi guys, welcome to Larry's show. He's off today. I'm John Logan filling in, and I haven't been on the Tiger Den or the network in a while. We're going to pick it back up Monday morning in a shorter sense. Right before 9 o'clock, I'll be on every day, and then Larry will pick it up from there. But I hope you guys are well this morning. Looking forward to John calling in a little bit later about some grain talk. So we'll get that in and look at some technicals. And I'll let you know a little bit more about some grain information that has happened around here. So immediately, and God, has it been everybody's kind of doing one of these, like I'm looking at on the TV after, some of the statements that have been coming out of the administration. Hey, I thought he said he was going to do this. Well, wait a minute. Now he's saying so it's kind of hard to gauge the future as far as, market outlooks. And a lot of people just kind of step aside when there's market uncertainty, especially with the fundamentals. But, we're going to focus on the technicals, and all things considered, I want to look at the S&Ps. Tom and I talked a little bit about this yesterday afternoon. And I did not go to Ralph's. That's not why I have not been on the show lately. But the S&Ps, 2341, that big number. And, I've been kind of looking at the internals, I'm showing the scanner now, looking at stocks that are, and in fact, I'll just go right into it. Stocks that are trading below profiles, above profiles, stocks that are trading within their balanced areas. And looking at the weekly and the daily, it's kind of super interesting to me that there's been quite a few stocks that have been breaking down also relative to stocks that have been breaking out. So I'll look at that also. But all things considered, you've got a mixed bag here when it comes to breadth calculations on right before the Easter weekend here also. And when we look at trading support here on the S&Ps, I know we've been in an uptrend. We had a pretty powerful reversal move a couple of weeks ago back in the balanced area, retest, a couple of good trades off that area. But when you come back and crowd it, and then you've got that mixed bag with the internals, and then I've been looking at more stocks breaking down than breaking out relative to profiles. So on a day-to-day basis, I've been talking about not really wanting to buy this 2341 area. And then when you've got gold kind of moving up, the dollar come off. I mean, these are all an uncertainty with the fundamentals. These are all things that the market won't like. And, people piling into stocks right now, especially fund managers, are kind of scratching their head going, wait a minute. Maybe I should kind of just sit tight for a little while here and see how this thing shakes out, as Tom would say. And I think that's kind of the way you got to look at this. Not a terribly biased opinion towards the short side or the long side, but really wanting to block out the long side right now because of the uncertainty, because of the mixed bag on the internals. And, that's basically the sum of it when it comes to looking at the S&Ps. Now, the 10-year, we've talked about this one. Let's see here. We've talked about the 10-year not really being anything to look at leveraging one way or the other. And here's where we're at on the long term on the 10-year to 30-year is a little bit more even exaggerated. But, we look at relatively wide profiles. And when we do that, we got to look at the POC. So we cross the border. And I've been a fan of just, there hasn't been a lot of edge lately in the 10-year until the past week or so. And that edge was, VIX climbing up. the market internals changing a little bit, but I still feel like 126.23. That's the top of the profile here on the long term. You got to take that for what it's worth. We kind of crossed the board, top of the mountain a couple of weeks ago, and then kind of used it as support. That kind of reversal and retest is always a good trade. But I still, and here's the daily on the 10-year. I think what you have to do on the 10-year is, watch the market, and then 126.23. In my opinion, on the treasuries is something you can short. All right. So, you don't have a lot of edge here. I don't think you need to buy it up into that area, but you got to just kind of sit tight. Market's looking a little heavy here as far as the S&Ps go. And we're definitely crossing that 2341 area, mixed bag on the breath. So the 10-year could just kind of continue to climb, but I would consider 126.23, again, something to really look at from the short side. Because, we have, and looking at the weekly here, we broke down. This is kind of a technical back and fill situation on the 10-year in a possible protracted technical move down. So you still got to look at it that way. But if the stock market that is, breaks down a little bit here, the 10-year could kind of give you that extra move up into 126.23. All right. So that's kind of the drill there. All right, so we're going to take a look at some sectors in a little bit here, but I want to cover some of the usual suspects. Crude, I think this trade's, probably over. Why? Was a big fan of kind of blocking out the short side for a while on this, waiting and seeing after we got to 51.16. We never retraced back to it to complete up to 53 here. But right now, the reason I'm thinking that this trade's over for a while is because of this. We've got a new profile attempting to appear here today. And let me go back to the scanner here. Let me go to the futures section. If you haven't gotten a new version of the scanner, we're coming out with some things on the back end before Monday, doing a little work more so this weekend to tighten up some of these sorts. But it's a pretty cool, way to kind of get down to business really quick. You can kind of do this, kind of adjust your charts a little bit, look at the landscape view, kind of open up things a little bit here now. And there's an opportunity matrix in here we'll talk about in a little bit. But if you look at crude, you'll see there's a big yellow cell there on the daily, which is what we just saw on the chart. So really, if you have this mechanism, I don't really know too much if you need another charting package, or even, I've got eSignal up. I've got too many eSignal subscriptions. And the ICE, which bought interactive data, my bill's pretty high there right now. So I'm considering turning it off and just using this exclusively. So as we look at crude, you've got that yellow cell happening there, which means a new supply area is happening. So if you've been long crude, it's just time to take some off the table, in my opinion. All right. And we're going to look at some currencies too. A lot of stuff going on here today, right before the weekend. So there's crude. Gold, this was one of the easier trades around lately. I mean, again, this is kind of like, I'm not saying crude's going to reverse here, but this is long-term weekly. When you get that yellow cell type new supply, new demand areas happening here, you've got to be willing to take some weight off. We're going to talk about gold when we get back, folks, and maybe what to do with it.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I'm filling in for Larry today. Let's take a look at gold. We were chatting about that before we went off the air there. So here's gold on the daily, and as opposed to crude oil that we looked at earlier, and again, I'm going to just I'm in the futures section of the scanner, and I'm going to go and just kind of click on breakouts. And if you'll see, gold and silver breaking out relative to the custom sort that we've got built on profiles. And one of the things you'll see also is you'll see 21 there on gold. And what does that mean? That means that it's been in a kind of a breakout mode since around 1200 or whatever that is down there. This is our daily chart. And the reason, I hadn't done the show for about a week or so. Tom and I got into a fist fight in his office in Clearwater, and that's why I stopped doing it. I'm just joking. It was a nice visit I had down there, but I just have been on the road to some degree since then. But as we look at gold here, we tried to block out the short side. We had a little bit of a respite around 1234 and below. We were back in the profile, remember, and then we kind of had the dollar doing its thing around this area, which kind of allowed gold to show itself pretty well around this 1200 area, if you remember, of, hey, I don't want to defaultly go down with the dollar rally. And so that gave us some areas to kind of bank, again, blocking out the short side. That gave us some areas to think about going long again. And then, obviously piercing this profile, we've raced up into this 1260 on the June contract for 21 days straight. So the reason I'm pulling it up and showing it to you in this kind of cell structure is because you don't have any hints to take this off. You got a breakout on the weekly, and unlike crude oil, you do not have any new profiles attempting to appear. You've got an Easter weekend coming up with Trump confusing everyone fundamentally, talking about caving in the dollar would be his choice, and some complete reversals on some administrative MOs that he had talked about pre-election. So everybody's completely confused, and gold's going up. So technically speaking and fundamentally speaking, all things considered, plus the weekend coming up and everybody scratching their head, I just don't see I don't see anybody selling gold right now. And the good news is for gold longs is that on the long term, you really don't even have anything until like 1,300 and even a little bit higher. Gold will probably overshoot that. So if you're just stepping into your morning and you've not been looking at gold compressing up into this 1260 on the June contract and then piercing it, getting a weekly close above, what do you do with it now? You know, I can't advise buying gold right now because we've had a pretty good move, and we've been right as rain on gold, starting about 1150 on this contract, reaching targets. That 1200 mechanism that was available to us based on that dollar situation that gave us some hints there, and now we got another breakout. I wouldn't buy it up here, but the targets I have talked about a while back were going to be around 1,300. I'm still standing by that. So I think that whole number is going to be a big deal. You've also got the 240 situation here, another profile appearing below price action. There's just zero reasons to look at this from the short side, and it's not yet time to take it off. So, all right, just checking the DIN here. All right, so looking at the dollar, this one, I don't think even though we're looking at the weekly here, this is the drill. We kind of had a little dipsy-do the other week. I still think we're going to start backing down on the dollar pretty significantly, and this little situation right here, that was kind of that's not a good bar right there on E-signal. This little situation right here where we're rallying back up into the bottom of the profile, 123. I know we pierced it a little bit more than that. I think you can dig in on the short side on the dollar and then orient stops above this 123 based on your appetite for risk. But we have, kind of, again, reverse sold off, rally back up, former support, now resistance type trade. I'm definitely thinking you've got a decent risk reward trade here from 123 down into 99.63 and probably even lower. So that's the drill in the dollar. And with that attitude, you've got to look at commodities that's, still might have a chance to kind of blow their lid here. Silver has just completely done a cool thing, getting back above daily and weekly profiles here. But let's take a look at copper really quick. This one is disturbing. So looking at copper, obviously relative to economic signs and things like that, that's obviously a big building material. But as we look at the bottom of a profile here, I don't like copper just because it actually should be bouncing here. And therefore, I think you've got to look at copper with the lid around 2.577 and just stay away from it right now. We're going to talk about some grains, I think, a little bit later, so we're going to leave that alone. Let's take a look at a couple of sectors. Utilities, I'm pretty high on these. I've been pretty high on them, and it's been just literally amazing with rates going up rates going up, that the utilities have kind of, this is our weekly view on the XLU. There have been some awesome trades within the scanner, by the way, just going back into I'm going to go into the utility sector here. It's number one on the breadth. Sea of green, except for, of course, AES Corp. So if you're looking to buy utilities, you know that this ain't really the one to buy. But there have been some awesome picks here, buying the strong of this sector as the utilities were really hanging in there. Man, that's just a sea of green, huh? as utilities have been hanging in there, relative to what's going on with the rates, now yesterday piercing 51.64. I think you've got to look at that as big time support now. Orient stops. This is not a day trader's dream, but this is, to me, all signs are north on this. I think the notes are going to probably edge a little bit higher, like we talked about, to that. And let me just restate that if you didn't catch the beginning of this show. Edge higher to 126.23, so got about another handle left in the 10-year on the upside. That's going to bode well for the utility trade also, so keep that in mind. And remember, it's kind of a safety play. Market's looking a little heavy here right before Easter. Mixed bag on the breath, more breakdowns and breakouts. So I think the utilities, kind of that anti-stock kind of situation, along with some other internals that are within that sector, are going to be some good plays. Tell you what, I think I hear the music. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we've got a guest. John, are you there?
John Logan.
Hey.
Welcome back. It's great to hear your voice and see your work, sir.
Oh, thanks. Good to hear your voice too. I'm assuming we're going to talk about grains.
Well, yes, indeed, John. The grain markets declined essentially March 1 into March 31 and into April 10th.
Mm-hmm.
And I'm wondering on these corn, July wheat, and November beans, if you can share your TAS data with us and tell us if those give any indication on where the risk is, assuming we're buying, which I am.
Mm-hmm. Okay. That's a good question. Well, the weekly, I wasn't really a huge fan of trying to do anything with 981 on the November soybean contract. It was kind of cool how on the long side, it was cool how it closed below and then retested it. I've been a little bit more short-minded. I think maybe we had spoke about that a little bit before, but right now, this is kind of the way I'm looking at it. I believe it or not, I kind of see this not as something that's going to turn around yet. I know we've got some breakage of profiles on the daily, but on the weekly, I'd really like to see a new weekly profile attempt to appear here before to really kind of base a long kind of move against. But here's the daily, and 961 is a pretty big number there. We've obviously broken that. I'm not trading soybeans right now, and this is, I think, a 15-minute delayed feed we're looking at, so I don't know exactly what's going on this minute.
It's 963 just as we open.
Okay.
So just right at that same price, John.
Oh, okay, cool. So believe it or not, I think if you're looking to be long, you could orient some stops below 961, but I kind of see that weekly move not being over with yet, and I would kind of just as soon see this get back in the balanced area and start heading a little bit farther south.
Hey, thanks very much on that. I do have a question, if you could, just on that daily for the November beans. I noticed 5-6 days back there was a yellow bar and a new daily profile came up. I noticed yesterday is also indicated yellow. What does that mean? Is there a new profile about to occur again?
No, that doesn't happen except when we go back in the box, like in a current box, in a current profile, if it goes back into the box, a lot of times it'll paint yellow. That's just the way we've got it, just as an indication to someone that we've closed back in the balanced area. I apologize
Thank you
for
that
confusion. Yeah, what do you have? In your head on the, if you don't mind, what do you have in your head on the fundamental side that is kind of getting you leaning towards the long side again here?
Two key factors, John. One, any decline, corn, bean, and wheat, beans, and wheat, any decline in the March 1st to April 15th time frame is always a buy. Always. That's ahead of the growing season. The idea being, if you get a decline, you might have too many shorts. That's the situation now. And two, we've got planting and growing season dead ahead. And the idea is lows made, the markets don't always, take 20 years. March 1st into April 15th, you don't always get declines. But if you do, that's the shot to buy seasonally. To get an edge. And then with the idea, minimum short covering rally. 2, possible weather scare rally. 3, possible truly adverse weather rally. So the idea is get in that time frame if you get a decline, which we have, and then follow what happens weather-wise. And, of course, I'm no weatherman, so I'm not going to make any forecasts there. But that's the rationale for buying here.
I hear what you're saying, but if you don't mind me asking, what could possibly? That makes a lot of sense. What could possibly be a trigger for a sell-off fundamentally right now? What fundamental news could be thrown out there in this little kind of column of the year, date-wise, for this to kind of trigger a sell-off? I mean, it sounds like, that's compelling what you're saying.
If you, a good question, easy answer. If week to week, the next 8-10 weeks, if United States and European and Russian wheat belt weather, if those unfold week to week, average or better than average, then amidst the heavy supplies globally in those commodities, you'll get a slow grind lower just because people are saying, oh, crops going in, growing weather good, big supplies coming dead ahead. So that's the answer.
So you got either a slow grind on the short side or just an all of a sudden spike on the long side.
Exactly okay. Right. That's it.
Great. Well, can we move to the other two?
Please do.
Okay. Let's look at December corn. Here's kind of the drill on corn. We got down into 380 here on the weekly, and have almost completed the cycle up to 397 up here on the weekly. Here's the daily. Kind of had some support on the way up, but are you thinking that we could break out above $4 a bushel here? Or is it kind of?
Yeah, John, it truly is the actual weather and the forecast of weather week by week going forward. So now that corn has bounced, if weather is good, if forecasts are good each passing week, slow grind lower.
Right.
If something turns adverse, you get a rally extension.
Can we look at July wheat, which is kind of a different animal?
Please do. Thank you.
Okay. So, that Kansas City wheat trade was pretty powerful and unfortunately kind of short-lived. I guess. Oh, that was the May thing we were looking at, right?
Yeah, we talked Kansas City wheat on January 31st.
Right. And now that we're looking at the July contract of Chicago wheat, you got a little bit of a resistance area, the way I see it, at 454.
54, excellent.
Right. So you're thinking what on this one?
Well, I like the fact that seeing the weekly point of control on that profile is right at the low 2 weeks ago. So that looks to me like that would be good support off which to buy.
Right.
And then it's whether it can, going forward, good or bad, that will dictate what the funds do and where price goes.
Can we talk a little bit about supplies after this break?
Be happy to.
Cool. We'll be right back, guys.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi guys, welcome back. We've got John from Philadelphia on with us. And John, I think we were getting ready to talk about some wheat supply information that might be banging around in your head, I would assume, to look at wheat from the long side, I'm assuming.
Yes, John, the idea is this: global wheat supplies are burdensome. The crops last year, the Argentinian crop, the Australian crop are all solid, so we've got big carryover stocks. In the U.S. here this year, acreage planted is at 100-year lows just because wheat got too cheap. Farmers couldn't make any money, so they didn't plant much. In spite of those record low acres being planted, if we get trend line yields, in other words, an average weather, if you will, the new production will be such that the carryover stocks remain too high, and wheat won't go up very much. It probably won't go down much, but won't go up much. If we get adverse weather, either here or over Ukraine, Russia, those are the conditions under which wheat could rally a bunch. And I point out that in the Chicago wheat futures, the ZWN contract, speculator shorts are excessively high. In other words, the crowd is betting on lower prices, and they're the first people to punt, cover their shorts, and buy if the trade's not working. My suspicion is that's likely the next 45 days. That's why I've been a buyer here the past couple of days.
Right. So 431, that's great. 431, that POC on the weekly, pretty wide profile. Got to pay attention to it. 454, that generally, are you thinking like in the short run, that's kind of like where you take a breather, or? Yeah,
and that's exactly why I wanted to ask you to post that data, because exactly I'm looking for the spots, the numbers to hang my hat on to book gains upon. Exactly.
Right. You know, it's really wild. Talking about wheat, and I don't know, if they do alternative plantings or whatever, but the Ukraine and that whole kind of belt over there north of the Black Sea, I guess, or kind of northwest of the Black Sea, or maybe just straight north of it. I was over there. I happened to be forced to go to Constanta. Is that the town over in Romania on the Black Sea? Somewhere. I think that's the name of the town. But I went over there, and in traveling from Bucharest to Constanta, and then we went north somewhere up. Well, I forgot the name of the Mondovia or Mondo. Is that the country up there north? I can't even remember.
I'm counting on you to give the geography lessons.
Yeah, I got to pull up a map to remember all that. But I back in those days, I couldn't remember much anyway. But I just remember literally as far as you could see driving for hundreds of miles, it was just grain fields. It was shocking.
It's just all you have to do is go Illinois, Iowa, Kansas, Missouri. It's the same thing. It's the same land, the same geography, the same weather and climate. Yep.
Yeah, but it was wild because you hear about these wheat fields over there and you see pictures of them, whatever. But it seems like that's all they ever grow. Like over here, I guess there's some alternative plantings or whatever. But over there, it was wild to see it. And you know what else was wild to see? That the old commie style grain silo kind of things sitting out in these plains that were collectives that they're just kind of pods. Every once in a while you'll see them and they're all concrete, and one of the things that the guy that I was with was telling me, he goes it was so wild, like all of a sudden the state owns all these things, and then all of a sudden who owns them, and then the guy who's kind of locally, they just kind of get a couple of machine guns together and kind of like, okay, it's my silo now.
Just remember, John, since the Russian Revolution of the 1990s, Russian agriculture has changed dramatically, and is much more comparable to the agriculture industry of the U.S. and Brazil.
Yeah, it's amazing.
Cool. Well, John, happy Easter to you. Enjoy your weekend. I appreciate it. And I'm going to hang up and ask you if you can give us your prediction of where the next 50-point S&P move is, up or down. But thank you, sir. Have a good weekend.
Got it. Will do. Thanks for calling in. Okay. All right. So put me on the spot here. I love it. Going to the S&Ps, it's hard to take. Right now, again, all things considered, like we talked about earlier, and a little bit of a mixed bag on the internals, it's hard to take a big stance yet this morning, and this is delayed futures I'm looking at on this particular terminal, so just keep that in mind. We may be a little different than where we're at right now, showing on my screen. But the weekly, this 2341, I almost think you got to be willing to look at this as something with a little bit bearish connotation today, just because of all the uncertainty and the comments from the administration. But a weekly close, I think, will put a pretty good stake in the ground above or below 2341. So to be prudent about it, and today's kind of the weekly close is Thursday, but you know what the drill is with the holiday here. So having that weekly close, I think, is going to kind of at least allow everybody's mind to be, this is where the market should be. This is where the business and offers have determined it should be at the weekly close, which is always a big deal when I look at trading, reversals, breakouts on profiles, and I'm looking at the S&Ps kind of going back in time here. And so, if you put a gun to my head and make me make a call, I would actually be a little bit more bearish towards the 50 points lower before we go 50 points higher. I know the VIX has picked up here. We're trading about 16 right now, but what gold's doing, gold's coming off a little bit here. Again, this is a little bit delayed here, but I mean, we haven't got any indication that you should be taking the long gold trade off right now. Getting up near 1300 is going to probably be that trigger, but there's some fear in the market, not a lot of fear yet. 16 on the VIX is I mean, if you want to look at it relative to what it was a couple of weeks ago, it's a huge move. But again, I think this thing could get into the 20s before we really start looking at any type of market turnaround going back north. So I think we're probably looking at 50 points lower than 50 points higher. There's some things going on with the dollar right now that are kind of unsettling, if you will. We've kind of crossed the border of what I talked about earlier, that 123. That's a little bit of a stop out for me right now. But again, I think the dollar easily can get back down to 99.63 and willing to take a shot again, getting back below 123 on the short side. I think, the turnaround stance with Trump could, he could say one thing one week and a whole policy different opinion the following week. So the market, and he's also kind of a guy, I guess, who likes to be liked. So you got to be aware of if he upsets the market with some kind of weird statement on Twitter, he may want everybody to like him again the next week. So keep that in mind. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Looking at the XLE, we talked about letting this thing kind of get back down into this area, and we were looking at trying to buy some strong XLE stocks instead of trying to go long crude oil. Crude oil had a nice rally there for sure, but getting down into that unfair low on the XLE was pretty good. But we had talked about RIG. I just want to pull that up, RIG, and a little bit of a bounce there. Talked about this one being on the board, a little maybe about a $12 to $13 bounce, but lo and behold, it has shown itself as a pretty weak component this past week. But getting down into I'm bringing this up. I think crude might kind of take a little break here, but as RIG is coming back down, I want to look at 1195. I think we're trading about 1188 right now, but 1195. We've had a profile, and again, this is the reason I'm looking at this way. All right, we've had, this thing kind of been in a downtrend, had some decent trades before, but as this profile edges higher, even though the stock has come off, I'm still looking at this area 1195 with a little bit of noise factored in as a buy point for this to complete a cycle up to 1380. So I know we're coming off a little bit this morning, but you've got some huge support around 1195, and that's actually the weekly and the daily, and a profile that's edged higher, and some targets that are decently up there. Let's do this. Let's go into this opportunity matrix for a second, and let's do this. Let's block out the short side, and let me get back to the S&Ps here. Yeah, this is on a delayed feed, so I apologize for that. We didn't have much time before Larry's show today, but one of the, my goodness, are we ending the show? Well, guys, thanks very much. I hear the music. Stay tuned for the rest of the hosts on TFNN today. Have a good Easter holiday.
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday, and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com.